Hello and welcome to the channel. Today we are going to take a look at the gold market. Before we proceed, disclaimer, this video is for information and education purposes only, and it is not a financial advice, and you have to do your own work and research. So we'll take a look at the gold futures, um, and this is the COMEX Gold and a continuous contract on the trading view. Before we begin to take a look at the gold market, we'll actually have a look at what is going on with the US dollar. So we'll take a look at dollar index. Okay, so last Friday, dollar index actually came and touched a very key level, which is the 78.6% retracement from this low here. And what is also important to see is that the market actually came down and then it found some buyers or perhaps profit taking, and the candle formation which we see is a bear candle because it closed in red, but you can see that perhaps there was a buying at this level, and it closed in kind of a middle. It's a kind of a doji candle, or a variation of it, and it just shows that the close was not very strong and some buying came into the market. So we explore this level and see if there is some structural elements to it. So we just try to go back in time and see, and there we go. What we see is that this level is also actually very close to the high in March of 2020. So there is some structural support approaching quite nearby, and also this happened to be the 78.6% retracement level. So it's possible that over the next trading week, we might see some strength come into the US dollar, and it's possible that the dollar might actually retrace some of the losses it sustained in the past week, and we could see perhaps a little bit of a rally in US dollar if this level, which is the 78.6%, sustains, and price doesn't go below that 104 level. So we'll have to wait for 2 consecutive days to see how the price is going to um, trade around this region. So having covered the US dollar, let's go back to our gold futures chart. So this is the COMEX Gold continuous contract or trading view. So what we can see is that gold actually had a pretty strong breakout from this level. I think we had discussed this in our previous video, which we did perhaps a couple of weeks ago. And then it had a retracement around here, and then it retraced to 38.2% retracement level of this low. So when a market actually retraces to 38.2% retracement level, it's a shallow retracement. It's just is an indication that the trend is actually quite strong. So in strong trending markets, we have a shallow retracement up to 38.2% level at times. And what we have noticed that is the on Thursday we had a big bullish bar which broke out of this range. So let me try drawing the range I'm talking about. Um, so if we call this a range, so it broke out of that, and we have seen that in the past some breakouts have actually failed. And also what it did is it went right into the 1.272 expansion of this swing here. And also what it has done is it has seemed to form, it has formed a wedge pattern. So one push up, second push up, third push up, and so that's kind of a wedge pattern we are looking at. And then it's also at a level which is the 1.2 1.272 expansion of this swing. So it's right into a zone where there is some resistance, and also we have the structural resistance um, coming from here as well. So it's possible that the market actually pulls back right into this trading range, and perhaps even test the low of this candle, this bullish candle from 1st of December. Uh, Perhaps even trace a little bit lower to touch the bottom of this trend line here, which is part of the wedge pattern. So we'll have to watch how the price is going to trade um, next week really carefully. And also the important level to watch for now based on this, let's bring our 38.2% retracement. So yeah, it could touch about 1780 perhaps, pretty much towards the bottom range of this bullish candle of 1st of December. um, and if we begin to actually break to the upside of this wedge, then it appears that gold is actually in an ABCD pattern to the upside, and our target is anywhere between 1880 to 1900. So 1900 is the 61.8% retracement of this high reached last in March of this year. And I believe that was the all-time high reached back then. And then we have this ABCD pattern completing here, and then we also have an expansion of this swing. I should draw this swing clearly for you, which comes around the 1880 level. So this is the I would just type possible target and resistance zone, um, because what will happen is that if the market retraces up to 61.8%, and then we also have this ABCD, it's forming actually a pattern called the Gartley triple two pattern, which perhaps I'll cover in another video another time. And this level around the 1900, in this zone of 1880 to 1900, possibly could be a pretty strong resistance if the market breaks out of this wedge pattern to the upside. And usually when these triangles or wedge patterns, when they break on either side, up or down, um, they the breakout is actually pretty strong. So they break out spectacularly. So we'll have to watch how the price is going to trade next week. And it appears that we have a bit of a resistance um, coming here because of this structure, also the upper end of this wedge, and it's possible that price could rotate down to 1780 to touch the bottom of this bullish candle of 1st of December. And then as we had a look at the dollar index, it's trading at that 78.6% retracement level, which could probably provide some support, and price could actually in the US dollar rise. And we have seen that when the dollar has been strong, the gold has been a little bit weaker, and vice versa. Although that correlation is not always there, it's not sometimes strong, sometimes it's weak. But at the moment, it does appear that as dollar is weakening against a basket of currencies, gold has benefited and the price has risen. So we are watching both what is happening with the dollar and how that is impacting the price of gold, and the kind of targets we are looking at. We are possibly looking for the completion of this ABCD pattern right into the resistance zone of 1880 to 1900. That's what we are watching for, and we'll have to wait and see how the price is going to trade. Possibly we are looking at some resistance where price pulls down to bottom of this candle to 38.2% back into the range, and then perhaps it finds support there, consolidate, and then make a move higher out of and breaks out of this trading range in a breakout to complete the ABCD pattern. So that's what we're watching in gold. Thank you very much for watching. And if you like what you see, how we look at the price action and the trading and the technical analysis which we do, then please do subscribe to the channel so that you'll know when new videos are posted. Thank you.